Welcome to the daily update, where I'll go over the action in the market for Wednesday, March 13th, and then we'll see how things look for Thursday, March 14th. It was a pretty slow day. We had CPI coming out, and now in Thursday's session, we have PPI and retail sales coming out in the same session. So the day in between was like a sandwich day with not an awful lot really happening. We ended up being slightly lower on the day. We're still looking positive, but we're also looking somewhat vulnerable at the same time. The market is hoping to get a clearer picture as to what is going to happen with the Fed. Now, that's the way things look right now. Some kind of weird thing could always come flying in that is unexpected and throw the whole scenario into a new direction. But the only thing we can go with right now is what we actually see and what we actually know about. We can only predict certain things here or there, but they may or may not end up happening. So let's go back and talk about what happened. Right at the open, we did have a lower open and prices went slightly negative, and we just kind of stayed there. We tried to go positive, but the unchanged level, which was also yesterday's high, that ended up acting as overhead resistance. And then we fell down to the daily pivot. This was the real move that we saw. The daily pivot was at 51.57. And then after that, we bounced back up and closed slightly negative. We were down 0.19% on below average volume. We've been seeing that more now. You can tell people are holding back a little bit right now until the picture becomes a little clearer. We don't see an awful lot of selling, and that's the positive side of things. We've had a real good run up. The market is still looking okay, but it might be a little overextended to the upside and due for some kind of a pullback. But to this point, we're not seeing a lot of selling into strength. So that in and of itself can be taken as positive. We are positive with our technicals. Again, in Thursday's session, it'll be about PPI and retail sales. That will feed into the inflation and interest rate scenario that we've been trying to work through here. Some comments. It was a quiet day between major economic reports. The indexes ended up mixed. The S&P was down. I believe the Dow was up, but there were minuscule results nonetheless. Here's our short-term list where we have the CCI 14 and 20, as well as the stochastics and the 20-period exponential moving average. Not a real big change here because we didn't see much movement in Wednesday's session. Then in the intermediate term, we have the 50-period exponential moving average. We're still getting very high readings with our oscillators. Some are dropping a little more negative below their moving average. Some are staying more positive. We also have the bullish percent index, as well as the Sean trend meter, and then our 10-period new high, new low study for the S&P. Long term, we still have the 150 simple moving average, as well as the simple moving average for the 200 period and the exponential moving average. This is the scenario we're still waiting to see more things unfold to see if we need to modify this current scenario. That it does look like the Fed is done raising rates. It looks like they could, and I hear everything across the board from there won't be any cuts in 2024 to earlier on, there was as many as 6, possibly 7. So take your pick. It's just a real guessing game right now. The dollar was down and interest rates were up. This is putting a little bit of pressure on stocks. We are climbing now with the 10-year yield where we closed at 4.19%. And we still have our yield curves that remain inverted. Sentiment didn't change. We're still positive. We're at 69 where we had been at 69. We are positive with our trend. The ADX is still dropping more below its moving average. You could have changed the bias over to negative because we had the slight down day, but we're just seeing these really small movements right now ahead of, we're hoping anyway, that things might become more clear in Thursday's session. And the momentum still continues to be positive. We did get the weekly MBA mortgage applications index, and that came in up 7.1%, with refinance applications up 12%. Purchase applications were up 5%. And that's what we're seeing a little bit. There's a little bit of recovery now going on in real estate as interest rates were coming back down. That really fed into buying new houses or refinancing houses, and that comes over into the mortgage applications. Here's the chart showing it's not as strong as it was the previous week, but it was still up on the week. Here's a chart put out by Real Investment Advice. This is usually a little bit longer than what I look at. This is a 225 period moving average. I do use a longer term one with the VIX and what have you, but they decided just to measure this. And this is giving us a pretty high reading over here, showing that we're pretty far above that longer term moving average. And that might mean that the market is somewhat vulnerable. Didn't really see anything on Twitter, although there was lots of different posts. And nobody's really saying anything substantial, at least that I could find. Here's our intraday chart where we did have a lower open and then we just went sideways. We tried to go up and go positive briefly, but we hit resistance at yesterday's R3 level. Then we came back down. This was the big move of the day. Some kind of a sell program or something came in, took us down to the daily pivot, but then we were able to bounce up off of that. Here's our intraday chart. Pretty quiet in the initial overnight session. We were going a little bit more positive in the pre-market session. Here's the cash session right now, and not an awful lot of action in the initial overnight session for Thursday. This is not really improving as much as we would like. We're still seeing the blue line below the red line, even though they are on different scales. We want to see the blue line ahead or on top and doing actually better. That means the growth is outperforming value. And then looking at our 10-minute intraday growth to value ratio, we did drop right at the open, but we spent much of the day coming back. And again, this is not the strength that we want to see, but it's not necessarily falling apart right now either. Here's an end of day chart. Growth was down where value ended up being up. When we look at the large caps, growth was up more for the mid caps as well as the small caps when you compare it to value. Here's a look at the small cap growth to value ratio. It's still hanging in there. We broke out and we're maintaining these levels for at least right now. We did decline when we look at mid cap growth to value, but we are still in a longer term uptrend. And with S&P growth to value, did decline, but we're still in a longer term uptrend here. This is showing a little bit of an improvement when we look at discretionary to staples. We turned up just a little bit with this ratio. We're still in an uptrend here, but this is another one of these measurements that we want to see really going up if we're going to be more positive on the market. Looking at our trend, we're still right on top of the moving average. The green line did come down since we had a slight down day, and it's just a tad above 40. Short term, trying to go a little bit above the moving average, but still pretty much right on top. Also, the green line is on top and barely above 40. We are dropping off when we look at volume over the last number of days. Here's sentiment. This is looking at the VIX on the line chart. Didn't see much of a move here. Actually ticked down a little bit with both the line chart and the bar chart. And the volatility of the VIX picked up a little bit. This could see a little bit of volatility increase ahead of some major economic reports. And then looking at the momentum, we're now kind of shifting back down a little bit when we use the MACD to determine what basic direction is the VIX going. This is the newer chart, and this is in response to a comment, and I have to kind of back it up a little bit. Somebody asked for, what about VRP? And I'm like, okay, there's ETFs with that name. There's volatility risk premium. For a number of years, I was an instructor for Microsoft, and I kid you not, there was a class that I had to teach where we had the same acronym, but it meant three different things. And so I'm all open to, hey, what about this? What about that? Can you bring up a chart of this? In fact, I have to use a different platform to show you this chart. It's not available in stock charts. And this basically takes what's called implied volatility. That's looking out into the future, what they think volatility is going to be looking out, and then historical volatility closer to what it is right now. And that's known as volatility risk premium. And we can see over here on this side, it's a little bit lower right now. And sometimes if you look at when we were really going down, that's when we saw the VRP really going up. When stocks are really going up, this is when we have a tendency to go lower. So, and then this is kind of the range that it's been in. So we're looking for moves either above or below this range. And if you trade a lot of options, you probably rely on this pretty heavily. And if some of you might find this chart actually helpful. But if you do have any other requests, either send me an email or post a comment. I don't do individual stocks, but if there's some kind of an indicator that you think might help you make some decisions, please let me know. All right. Looking at the equity put call ratio, it did decline, even though we had the down day, and we're still declining with our 5-period equity put call ratio. That's positive. The advanced decline line, this is still looking quite good. Even with the down day, we're continuing to go up based on price and volume. So that's an internal measure that's holding up. We did see a bit of an increase with the new highs and really no new lows, but we're still going sideways here with our 5-period. We're starting to flatten out, but still declining slightly with the 10-period. This is another internal measure of what's going on inside of the S&P 500. This is also looking more positive. The advanced decline ratio is above 0 and going up. We're seeing a series of higher lows and to a degree, some higher highs here. That just means that volume has really been showing some improvement over the last week or so. Accumulation distribution, not a big change, but we're still above the moving average. We are showing some improvement here, but we went back down with the chicken money flow. We want to see this green histogram go back up and then see the red line turn back up. But for right now, it's still positive. And the Chaikin oscillator, which is closely related to the Chaikin money flow, is starting to go back up and is above 0. That's positive. Then looking at the cumulative price for the S&P 500, this is still looking pretty positive, both based on price and volume. And the NYSE cumulative advanced decline line is improving, not breaking out above these previous levels, but it is going up. And our regular advanced decline line is still showing an improvement here. Here's another advanced decline line calculated in a slightly different way. It's also still looking positive. And then we look at the common stock where we're looking pretty good based on price. And we are matching that more now based on volume. We're not really seeing that negative divergence that we had been seeing. So looking at our advanced decline line studies, we're going up with the NYSE based on common stock. We're even with the down day, we were still up with the S&P, a little bit of a tick up with the mid caps, and we were pretty much flat with the small caps. Here's our daily chart. We still have not been able to get back above this trend line. With the down day, we're just a little bit further below. On the bottom, you see where we are dropping to below average for the S&P 500 volume. Here's the CCI 14, just barely into an extreme positive reading. The CCI 20 also just barely extreme positive. We are keeping an eye on the 20-period moving averages. If we start to fall, if we see a pullback, we'll be watching this level to see if it ends up providing support. We're still looking extreme with the 20, 50, and 200-period exponential moving averages. Now, again, these are based on the S&P price itself, and so we get slightly different readings than when we look inside of the S&P 500 at all the different stocks. This is just measuring the index. And the force index, it fell a little bit below its midpoint for right now, and you can see the midpoint is starting to really chop sideways. And we're falling, but still extreme positive in the short term. We're turning back up in the intermediate short term, and we're also extreme positive in the long short term. So all of these charts are continuing to be extreme positive. We did decline a little bit. We're more up into the +2 standard deviation channel now, so we're not extreme. Looking at the intermediate term, this is interesting here. The balance of power is starting to show a little bit more negativity. It's barely positive. It's at 0.01, but this could end up dropping negative if we see more weakness. And we continue to be more neutral to positive with the go, no-go system. We're still above the midpoint with our highest high values. The TTM squeeze switching back over to a darker blue, that's positive, but with more of a negative slant to it. The ease of movement did decline, but we're still above 0. And we did decline. The Erin finally woke up and said, oh, something happened here. We're seeing a bit of a decline with the buyers. That's the green line on top. We're seeing an increase of the sellers. That's why the oscillator is going down, but we're still above 0. And the McClellan oscillator for the S&P continues to decline, but we're still above 0 for right now. We're also keeping an eye on this longer-term negative divergence, but we continue to go up with the summation index based on price and volume has been looking better. We did turn up with the NYSE McClellan oscillator and are above zero. So we're going up based on price and volume and still looking stronger based on volume. We ticked down slightly, but we're still positive with the Swenlin trading oscillator based on price and volume. Here's our oscillators. See, these are built for trends, and we've been chopping. And that's why our ADX is all confused. That's why our oscillators are all confused. And so they're not really sure what to give us as far as readings. But when we break it out based on price and volume, the trends continue to be positive. We turned down a little bit with the PMOs that are rising. We're rolling over with the buy signals. We're starting to get extreme positive with the PMOs that are above zero. And we still remain positive with the Elder's Impulse system for the S&P. We're also positive with the parabolic SAR. The slope, now it's kind of coming back down to its moving average, but still giving us a pretty high reading. Again, you could make a case for a longer-term negative divergence and even a shorter-term negative divergence. The MACD also right about on its moving average, also a longer-term negative divergence and even possibly a shorter-term negative divergence here. So our oscillators are just pretty much flatlining now. They're just taking a good long nap. We will be watching the moving averages if we start to see declines. We did go up with the bullish percent index. That's positive. We closed down, but we saw this shoot up a little bit. So that is more positive. And we're also going up with the NYSE bullish percent index. We were flat with the NASDAQ 100 bullish percent index. That's one thing we want to keep an eye on. We also want to watch the NASDAQ 100 because so many of those stocks are also included in the S&P 500. If the NASDAQ 100 is looking strong, that tends to help the S&P. The money flow is above 50. It was flat, but it's still positive. The ultimate oscillator turned down, but is also still above 50. We're going back up slightly with the vortex. It's still not showing an awful lot of strength here. We'll see if it can break out of this idea of setting lower highs. And we're still positive with the RSI 14 and 9. We're positive with the on-balance volume, even though we did tick down. We're above the advancing moving average. And we came down just a little bit with those stocks inside of the S&P that are above their 20-period moving averages. We're getting a pretty high reading now. We pretty much, you could still make a case for a negative divergence here, but you could also make a case on a short-term basis that this negative divergence has been negated now. We're still seeing it a little more pronounced when we look at the 50-period moving average study inside the S&P 500. It actually turned up just a little bit, but we want to see this be stronger than what it's been. And with the 200 period, we actually are going back and setting a high here, but now we're getting to an extreme reading. And this is, as I pointed out in the What to Watch video, this is like a two-edged sword here because we're going up and we're getting a very high reading. That's good, but we're usually when we get to this level, that's an extreme positive reading. The copy curve, pretty comatose right now. And the Sean trend meter did go back up and not quite extreme positive. When we look at our trends based on the hike in ASHI, we are still positive with open candles. We're still pointing up with the Kagi chart. We're still positive with the Rango chart, and we're positive with the three-line break. Here's our trend line. Even though we've been going up and not really falling back, this trend line is going up, and that's why it's now providing overhead resistance. And as I stated in yesterday's video, I had to adjust the time for the 50-day cycle. It's now going to be March 18th. And we're watching this weekly chart. We're still above this R1 pivot level. The longer we can stay above this, the more positive it will be. The other times when we hit this, we ended up hitting it and then reversing pretty quickly. Well, if we can stay above this level, that would end up being more positive. I don't know if I'd really count this as support, at least yet. We haven't really been above it that long. We're still extreme positive with the 150 and 200 period simple moving averages. We're still positive with the Keller market model when we look at all the different indexes across all the different time frames. And here are the alerts that were triggered, some positive, some negative, none that really apply to the S&P. Canada is kind of bouncing around here. That's what TSX is. And here's the equal weight as well as the S&P 500 weighted index. We did go back up. Actually, we went down. Sorry. I look at this and then I look at the number. We actually came down a little bit as the broad market did just a little bit better in Wednesday's session. We were up slightly with the Dow. We're still above this pivot level here. We continue to be positive with the diamonds when looking at the Elders Impulse system. We didn't really move all that much. We were down 0.5%, but we're watching this R1 level here as overhead resistance. If we go up for the NASDAQ, if we fall, we'll be watching this pivot level. And a very similar story here with the NASDAQ 100. This R1 level and this pivot level. Those are kind of shorter term support or resistance. We have switched over to neutral with the QQQs when looking at the Elders Impulse system. We're still seeing negative momentum here as measured by the PPO. And you could also say longer term negative divergence and a shorter term negative divergence. Here's the QQQs. We will be watching the 20-period moving average here as well. Here's the longer term ratio. We did decline, but we're just about at this high reading right now. So nothing's really been decided here, and it probably won't be for quite some time. Small caps, they were up just a little bit, but they've been really chopping sideways, and they remain neutral when looking at the small caps for the Elders Impulse system. And when we look at the Russell 2000 small caps, we're still above 50 with the RSI, longer term uptrend. The momentum is trying to cross over negative, but hasn't quite done so yet. The mid caps were able to recapture this R1 level and then stay above it. They were up 0.33%, but they still remain neutral when we look at the Elders Impulse system. Google is so far doing a pretty good job of bouncing up off of its 200-day moving average. It's coming back up to its 50. Is that going to act as resistance? Are we going to be able to break through that and get above both moving averages? Apple is starting to give us a death cross here and is looking like it's more in a downtrend. And Tesla is already in a downtrend and has really been seeing some recent weakness. The FANG index pretty much chopping sideways. It was down 0.81% and not setting new all-time highs. The financial sector, it was up almost 0.75% and is looking pretty solid. Here's New York Community Bank, just to keep an eye on this. And like I said, we're looking for other banks to come out and say that they're having problems. The dollar was up slightly, but we're still below both moving averages. We might actually see a golden cross here, unless we really start to fall below both moving averages. We were up with the 10-year yield. We were down with the 10-year based on price. We're dropping below the 50-period moving average. And looking at our growth to value ratios, we are weakening with the Qs compared to the S&P, discretionary to the S&P, large cap growth versus large cap value. It's still below the moving average, but it's not falling as much as these other ratios we see. So we're pretty much on top of the moving average with the large caps. We're dropping below with the mid caps. We're still above the moving average with the small caps. We're still looking positive longer term across the broad market. When we look at the 5-period moving average of highs minus the lows, we're still camped out in extreme positive territory with the 10-day average of the S&P 500 highs minus the lows. So our outlook, we're still positive for right now. And it's like, what do you say here when nothing really happened? It appears like we're holding steady before we have some major economic reports that are going to be released. We're still above that 5110, 5111 level. I'm still calling it overhead resistance, even though we're above it. We could potentially be in a time of weak seasonality, but we just haven't really seen that develop yet. And we're wondering, is the market vulnerable because we're getting so many extreme readings? Our momentum oscillators and things that we use, they're just flatlining right now. We will get the weekly jobless claims. PPI is going to be the big one, and retail sales, also a very big report, as well as business inventories. And then we want to keep an eye on all the crazy things going on that doesn't really seem to have much of an impact right now on the market, but that could always change. So we will get industrial production and capacity utilization on Friday, as well as consumer sentiment. But for right now, it's looking like Thursday could be a real influential day. What's going to be frustrating is if one report comes in friendly and the other report comes in unfriendly, or both reports are mixed and going to keep things kind of gray. And that's when you see volume pulling back. But at the same time, we're not seeing a lot of selling into that nonetheless. Okay. And then this is the list for Thursday's session. Seasonality. We're positive when we look at the Dow, but we're neutral to negative when we look at the S&P and NASDAQ from March 2002 up to December 2022. We see a little bit of positive seasonality here with the green dashed line during an election year. We could be seeing at some point some weak seasonality as we start to play out more of March. We also see that when we look at the sitting president who is running for re-election. Thursday tends to be one of the more positive days of the week. We're still in this window now, according to Tom Bowley's research, where we often see positive returns. So the warning signs, we're just below average with volume. We see that on up days. We see that on down days. That's just showing a market that's kind of waiting to see things play out. We still have our list of negative divergences. Some of them are improving, but they're still there for right now, especially the transports. They just flatlining sideways with everything else. And we might be coming at some point into a period of historical seasonal weakness. The equity put call ratio based on 5 periods, it's a little more pronounced. It's going down, and that is positive. The parabolic SAR topic curve, okay, it's pretty much mating right now with its moving average. The vortex is positive, and it turned up, but it has been showing some weakness when we look at a bigger picture of that. Small and mid-cap growth continue to be positive, and the financial sector is positive. So our conclusion, we are positive, but we're kind of in wait and see mode right now on this lower volume that we've been seeing. We're still above that overhead resistance. We might experience some weak seasonality at some point, and we're wondering, is there the opportunity for weakness to develop? That's what we're watching right now in the short term. Intermediate term, we still have some extreme positive indicators showing that we're slightly overbought for right now. We are positive in the long term, but we are overbought with our longer term moving averages. Thank you. I really hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.